Bitcoin represents a new technology. I mean, a breakthrough technology, and there's a couple of benefits to it. The first benefit is it's the first digital monetary network in the history of the world. So it's capped at 21 million Bitcoin. So that means if you owned all the money in the world, you bought all the Bitcoin, you had 21 million Bitcoin. 100 years from now, you still have 21 million Bitcoin. There's no more Bitcoin coming. That's kind of hyperbolic because obviously no one's going to have all the money in the world. But I mean, a better example is if you buy 1% of the Bitcoin in 100 years, you'll still have 1% of the Bitcoin. If you buy 1% of the gold in 100 years, you'll have 1/10 of that, 0.12% of the gold. And if you buy 1% of the dollars in the world, you'll have 0.1% of what you had 100 years from now. So Bitcoin is a conservative monetary network. In fact, there's no heat lapse, there's no leakage, there's no inflation.
Billionaire Michael Saylor doesn't often speak about other crypto assets outside of Bitcoin. He's only ever invested in Bitcoin, so why would he? In this interview, Saylor lays out exactly how he sees the entire crypto landscape. This includes how he views other top crypto asset networks such as Ethereum, Solana, and Binance. If one thing is clear to Saylor, it's that on a risk to reward ratio, Bitcoin has no competition. Make sure to stick around to the end of the video where Saylor breaks down why he foresees it as inevitable that hundreds of trillions of dollars is coming for Bitcoin. He also breaks down the best strategy he has seen throughout his career to get rich. Also guys, if you want to stay most up to date on the crypto world, I send out a daily 5-minute crypto newsletter that covers expert predictions, on-chain data breakdowns, and breaking news, all for free. Click the first link in the description, enter your email, and join over 40,000 others to become a better crypto investor right now. Now here's Michael Saylor with his outlook on all of crypto.
So Bitcoin is like that. It's a way to freeze your economic energy so that it doesn't dissipate. And that's the first big idea. But the second idea is Bitcoin's a bank in cyberspace. It's kind of a bank, a money transfer network, and it's the money. So it's all three of those things. This is not as important to Americans that have a bank they trust, but if you live in Africa and the bank is run by the cousin of the guy that just took over the country last week, if you put your money in that bank, they're probably just going to take it. And if you want to convert your money from that local currency to another currency, they probably take half. Oftentimes, the capital controls are such that the country will fix the exchange rate at half of the real value. So every time you change money, you give half of it to the bank and you get the other half. It's not a terribly fair thing for the proletariat. But what Bitcoin allows you to do, if I wanted to buy your car and you were in Africa, I could pay you for your car in Bitcoin, and then you would get the fair exchange rate for the Bitcoin. Then you could hold the Bitcoin either on your own hardware device, you could be your own bank, or you could deposit the Bitcoin with a custodian somewhere outside of your country, because Bitcoin is a global network, so anybody can be a custodian of Bitcoin. So you would have an asset which is pure property, which is not being debased by capital, it's not being debased by manufacturing or devalued by manufacturing, and it's not being devalued by monetary inflation. And you would not have to rely upon the local banking system, the local government, or the local currency. All three of those are weak links. And if you look at wealthy people, most people that are wealthy in the world are wealthy because they converted their currency, whatever they earned, they converted it into property. What does the royal family of the UK have? They own the middle of London. What does the Emperor of Japan have? They own the middle of Tokyo, right? If you own a block in New York City or Paris, then when would you ever want to sell that? You probably never want to sell it. You want to keep it forever. And if you want to stay wealthy, you buy that land and you hold it because it appreciates in value at the rate that the money collapses. But if you want to get wealthy, then you go leveraged long. So like if I can borrow a bunch of money, if I can borrow $10 million and buy $10 million worth of scarce desirable property, then every year it goes up in value 7%. And after 10 years, it's doubled in value. So now my $10 million acquisition is worth $20 million and I've got $10 million in equity. So then I refinance the property and I take out $5 million in equity and I live off of that without paying tax on it. The next 10 years, the $20 million property is worth $40 million. And then after 10 more years, the $40 million is worth $80 million. So you see how your family starts to become very wealthy because your grandfather bought 10 blocks in the middle of New York or in the middle of Paris or some city. You know, it has to be scarce desirable, right? People have to want to live there. And so the risk is if you bought those 10 blocks blocks in the middle of Kansas, maybe it doesn't appreciate at the same rate. Generally, this strategy works well when you're buying land in the middle of Tokyo, London, Paris, or New York, right? We all know stories of wealthy people that bought that land. But you could think about Bitcoin as, imagine I created a city in cyberspace that had only 21 million blocks, and one day 8 billion people will want to live there. And all 8 billion people can move in, and there's no mayor to put a zoning restriction on it or pass a city tax. And there's no governor to put a state tax on it. And there's no president or Congress to put a national property tax on it. And when the place where you live decides to tax it, you can fly on an airplane, to Singapore or Monaco or some other place, or you can move from one state. Maybe you move from a high tax state to a low tax state, and then you keep your property. So Bitcoin represents digital property. If you own assets that generate rents, that's a currency derivative. The rents are going to be devalued. If you own bonds, that's a currency derivative. They're going to be devalued. And every single fiat currency in the world is built to be devalued. The only question is, will it be devalued at 7% a year versus desirable assets? Or will it be devalued at 14% a year? Or will it be devalued at 40% a year? But it is 100% certain that the currencies will be devalued. The bonds are going to have a negative real yield. They'll be devalued. Value stocks and commercial real estate that's valued partially on the cash flows will be devalued. So Bitcoin kind of represents more like that trophy asset, like the one-of-a-kind trophy piece of art, or the one-in-a-kind franchise, or the one-in-a-kind beachfront property. Everybody wants, it's not valued based on cash flows. It's valued based upon its scarcity and desirability. We have lots of examples of people that buy Ferraris as a store of value, or Rolex as a store of value, or commercial art as a store of value. But the ideal money is something liquid and fungible, and Bitcoin is liquid and fungible. So it's like that high quality, desirable real estate, but it's like buying a pure city block in the most desirable city on earth. And it's got a global brand, because Tokyo is only interesting if you speak Japanese, and Paris is maybe interesting if you speak French. But Bitcoin is neutral in cyberspace. The Chinese like it, the Russians like it, the Americans like it, the Europeans like it, the Africans like it, the South Americans like it. Why wouldn't you like it, right? It passes this last Bernard Arnault test, which is you ought to buy something that someone richer than you and more sophisticated than you will want to buy from you in a decade. And if that's what you're buying, then you're probably going to be okay.
Okay, if we were in this situation and we're running from Ukraine with Ukrainian money to Romania or Poland, they're not going to want that money because they don't know what's going to happen to this country. Or if all of my money is in gold, what am I going to do? Get a wheelbarrow full of gold, or, put it in my backpack and someone's going to mug me and kill me? And then can I exchange it once I get to Poland? And I remember thinking, oh my gosh, like they could go from this area to any part of Europe with Bitcoin, and it would be able to liquidate that and keep your family moving forward. That was the first time that my brain was like, wait a minute, there's something to this digital energy being able to move around the globe.
Yeah, Bitcoin is economic sovereignty, financial freedom. It might be life. If you were Jewish and you lived in the 1930s in Germany, it's a difference between life and death. You can't take your buildings with you. You can't take your land with you. They won't let you smuggle the gold through the airport. You can't take your cash with you. Diamonds were the closest idea, but diamonds aren't scarce. You can produce a lot of diamonds. In the absence of a cartel, diamond value collapses. So humanity for thousands of years has looked for a way to store their economic energy or their wealth and to own it and not have someone seize it from them, whether it's a criminal or whether it's a hostile regime, whether it's the majority abusing the minority. If you study the history of the world, there's 1,000 stories where someone takes over a country and then somebody else is in the minority, so they just pass a law taking all their property. Whether it's happened to the Jews 1,000 times, it happened to the Christians under the Muslims, happens to the Muslims under the Christians, happens to the Puritans under the Anglicans, happens to the Protestants under the Catholics, happens to the Quakers underneath the Puritans. It's amazing the creativity with which human beings have a way of deciding that someone else is other and just taking their stuff. And eventually, if you're lucky enough to be able to flee with your life, then you've got your life. But if you can flee with your property, then you can start again. And so Bitcoin's the first time we solved that problem. We never really created perfected money. It's basically pharmaceutical grade gold engineered or synthetic money that has infinite infinite economic density. Not only can you carry all that you have either in your head or on a hardware wallet, but you could also zap all that you have to your wife in another country or to your children if you needed to. So it does represent a new degree of freedom and sovereignty for the human race. And of course, that's desirable to everybody on the planet. In fact, it's not just desirable to all 8 billion people on the planet. Every company wants that. Companies get abused by countries just like people get abused. At the end of the day, it solves a problem every human faces. It solves a problem every company faces. It also holds out some new ideas. Like most of the modern financial system is all about monetizing assets. So why does an 80-year-old retiree have to juggle stocks in order to avoid losing their life savings, right? And so hence you have the creation of ETFs, and you have the creation of the S&P index, and you have the overvaluation of stocks. If a company ought to be worth 10 times cash flow, it's worth 20 times cash flow because there's a monetary premium assigned to it. You see a monetization of real estate in places like Canada or even the US, where the house costs twice as much as it ought to cost because it's valued as an asset to store your wealth rather than as a property to live in. So in the absence of a decent financial asset to store your wealth, people will use Ferraris and Rolexes and Airbnb second apartments, or they'll buy random things they don't need, or they'll buy companies they don't need. And you'll end up with like the meme stock craze and all sorts of financial speculations. But ultimately, these are people that are faced with the choice of, I'm either going to lose everything because of inflation, or I'm going to buy something that I don't need now, but I'll speculate that in the future someone else will buy it from me. In hyperinflation, when the currency collapses, you'll buy crates of soap, you'll buy crates of toilet paper, right? You'll buy bins of charcoal, or you'll buy anything, lumber, because it's better to have the lumber than to have a bunch of paper worth nothing. That, of course, results in a distortion of the financial markets, and it also results in a seizure of the actual manufacturing markets, right? Goods and services get out of kilter, and you end up with shortages.
So there's Michael Saylor on Bitcoin and the broader crypto landscape. Saylor's unwavering belief in Bitcoin's unparalleled risk to reward and his vision of a future where hundreds of trillions of dollars flow into it have given us much to consider. Remember, Saylor's strategic insights are not just theoretical musings. They are distilled wisdom of a highly successful career, offering a roadmap to potential wealth in the crypto domain. As we reflect on his breakdown of the best strategies to prosper in this rapidly evolving market, it's clear that the journey to understand and success in cryptocurrency is ongoing, and you don't have to navigate it alone. My daily 5-minute crypto newsletter is designed to keep you informed and ahead of the curve. Join the 40,000 crypto enthusiasts who are already gaining invaluable insights from our expert predictions, on-chain data breakdowns, and the latest breaking news. Don't miss out on an opportunity to enhance your crypto investment strategy. Click the first link in the description, enter your email, and take the first step towards becoming a more savvy crypto investor. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.